let's go back to Brent and your call for Brent to go back to the 70s in 2024. That obviously would be a supply story. But when you think about that forecast, how big of a risk are you considering that maybe demand will come in stronger than expected?
Well, we don't think demand is going to come in stronger than expected unless for some reason there's a change in every economist's judgment about where economic growth is going to be next year. But the drag from China, the drag from Europe, and what we expect is a drag from the United States coming into the market really weighs heavily. So if we have 1.4 to 1.7% GDP growth in the world, it's hard to find a number on the physical oil side that can't be readily met without having a surplus in the market.
And looking through your note, you write that higher prices in the near term could make for more downside for prices next year. Could you walk me through that relationship? Higher prices right now, what is the lag between how that translates into future demand?
Well, there are several things at work. One of the issues is really China and its role in the international oil system. It's got a role that's almost as important as OPEC Plus. And they've been playing this role since the great financial crisis, when they discovered the benefits of buying oil when the price was low and selling mostly product when the price was high. And that's exactly the position they are now in. They accumulated just before the pandemic and now about 500 billion barrels worth of oil. We estimate that their inventory of crude and product is about 1.4 billion, equal to about 130 days of forward demand cover. The IEA typical country has a rule of 90 days of forward cover, and that's pretty conservative. So they've really overdone it. Maybe there's geopolitics in it as well. And now they're selling more product. So they're going to be weighing less heavily with a high price by buying less high-priced crude. And they're going to be taking advantage of what we're seeing in the distillate market and to some degree the gasoline market with these high margins in the refining system by selling more of that into the market than they otherwise would.
For those folks who look at the commodity market as sort of a read on economic conditions, we've seen what energy prices have done of late. We've also seen industrial metals not do much of anything for a good portion of the year. I don't know if that's largely the China effect or not, but what is that telling us about the state of the global economy right now?
Well, the metals demand has been off, and it's not just China that's not been as high as people expected, partly because the Chinese have actually put a lid on how much metals they're going to be manufacturing here and there, whether it's got to do with economic security, whether it has to do with going green, or a combination of the two. It doesn't really matter. They do have a lid on what they'll process in terms of aluminum and in terms of steel. So that does matter. But the rest of the world has not seen much in the way of demand. PMIs have been in negative territory, and we expect European manufacturing to be low and U.S. manufacturing to remain lower than what it might be with a growing economy.
Yeah, we got some new data this morning.
But we are bullish, definitely.
Right, but coming back up, right?
We're bullish eventually, like by the end of...
Eventually, what does that mean? Like next year or 10
like
years
next year,
now?
yeah.
Yeah, really?
Yeah, we think that the demand for copper is going to go up. The supply is not going up. That's basically an industrial metal story, but copper is pretty extreme on it.
And is there any other big player that we should pay attention to other than China and obviously the U.S. for that matter?
Well, of course there are.
Yeah.
We talk about the Fragile Five a lot. These are 5 countries that have been members of OPEC: Iran, Iraq, Libya, Nigeria, and Venezuela. They've all kind of been very disappointing in their production. People have ignored them. But actually, year on year, their production's up over 1 million barrels a day. And we think year on year, it's going to be up another 1 million barrels a day. And we think the OPEC Secretariat and the IEA have not really taken into account this new change in production activities in every one of those 5 countries. Maybe Libya is a little bit of an exception, but it's certainly reopened to foreign investment, so it should be growing.